Hey guys, welcome. It's the Market Sniper. Yep, we're going to talk to you about today the Nikkei index. That's right. We're going to talk to you about the yen, the one you're supposed to be short of, that you're insufficiently short of, and why. And we mentioned last time we spoke about this that neither Druckenmiller, Martin Armstrong, or many other people that we've spoken to are asked about the trades for this year and what to do. Oh, it's the hardest year ever. It's the hardest year. No ideas. But no one is talking about the yen, the debt situation with their yield curve management. We'll come back to that in 1 second. And what that actually means, more importantly, for the Nikkei, which is getting a tailwind, particularly for their major large equities that are getting the benefit of export markets, where they predominantly export markets over local markets, and they are going to have a hedge value in yen, yet their valuation is priced in a depreciating currency, meaning as they continue to retain market share, even gain market share, with the benefits of reduced costs in terms of their yen-based costs, their efficiencies, good quality products as is typically associated with Japan, that they can be gaining market shares in international waters in difficult times, it must be said, certainly in terms of the retail consumer. And in spite of that, be getting extra large profits due to the fact that they'll be selling in dollars, euros, and other currencies. So what is happening on the yen? We will be going into all of this right now as we hit into the tubes and head into the charting and the historical session. Before we do that, don't forget to hit us up with a quick like, and remember, you can book a call if you want the news before the news by going into the description and hitting the very first link in the description to book a call. Let's go to when last we spoke to you about Japan. So if you look at our YouTubes, around about 4 weeks, a month ago or so, we were talking about the yen and harikiri, and using our usual ill-begotten humor, dare we say, black humor, let's go with the black box, shall we, on the overall prospects for the yen as a currency in the environment of yield curve control that they are implementing on their super expansive, over-proliferated debt markets. So with that understood, we said to you, behold, 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 an opportunity for the Nikkei to go through 57,000, which is well blasting past a 38,000 previous high. Let's go to those charts and have a look. So it was about a month ago that we last referenced this. I'm not sure whether we'd referenced it too much more before publicly. We'd been speaking about it on an extensive basis in our community. So here we have a look at the 30-year debt markets for Japan. And you can see, for example, that these yields have climbed a little bit from their absolute lows. We're on the 3-day chart. As I drop it down into the daily, though, however, you can see there's prospects for this to actually give us a reversal pattern. I would normally carve this up, throw down a neckline in and around the 1.2 level. We'd look at that left and that as a big head, and we are getting squeezy, Japanesey, a grind line over here for a potential drop. What happens when yields go down? Yields go down, the bond valuations go up. The bond valuations go up as yields go down. If Japan is not going to allow their interest rates to go onwards and upwards to match that of America's tightening, Europe's tightening, and all the other major debt nations tightening with increases in rates as inflation has proliferated, what happens? They maintain their debt markets artificially high in valuation and low yielding. This is the concept of yield curve control. And this is a way that you sustain your bond market, particularly when you have a domestic market heavily exposed to that debt market. But what then happens? Well, you can hold currencies in an American account, you can sell yen in a global macro view. The big wealth, the treasuries of big corporates can decide whether to hold yen and earn a small pittance in Japanese yen in a Japanese bank, or move it over to a European, American, or other world nation where in actual fact they will get some degree of yield. And this of course extends into money markets and various other things that Treasury sometimes may get involved in. What then becomes the problem? Well, as people recognize this, and you have to think, it's quite important for everybody to understand. Starting with the debt market, not everybody's most popular. We'll be going to the Nikkei shortly, and equities. When you are thinking about the world as it is, like the big macro traders, the big hedge fund traders, they can move money anywhere and it goes where it's treated best. In short, where is the currency going to retain value? That would not be the Turkish lira and the Japanese yen, for example. And where will it actually get a decent yield if it's okay in its retention of value compared to others that might retain a degree of value? So this allows people to pick and choose where they put idle profits before investing them again. And the place it will not be, in terms of our assessment, is the yen. And why is that so? Well, the reason that is so is because of that very same yield curve control. Because as you sustain the value of your debt artificially high and pay a non-financially feasible interest rate, in other words, you are not letting price discovery demand a better interest rate in an inflationary environment where you are getting guaranteed devaluation as an actual function of the inflation that you are facing, and every nation is facing inflation, particularly on the commodity side, and Japan is a net commodity importer. You also have to remember that the demographic boom, Japan is at least 11 years, and in some senses 20 plus years in terms of its development of debt and other aspects ahead of America. So its demographics are poor. And as a result, what does that mean? The currency loses value. The bonds devalue through the devaluation of the currency at an international level. So all of Japan and its citizens become less wealthy. They traveled Europe with the best cameras on tour buses with guided tour guards and hosts and various other things in smart clothing, etc. They will buy less European tourism, less American tourism, and less general wealth. In short, you're seeing a contraction on the currency, and that is being the main release valve for the situation that they find themselves in, and the control of the yield curve that they've sought to do. So let's have a look at some of the charts. First of all, before we get too deep into the weeds with the yen, we are also facing right now a spell of dollar weakness. So we called this as a dip. You dip down, and then we've seen this turn. You can see the blue line, a little bit of a reversal there, and you've been going back up. This is putting support under gold. We're seeing a Bitcoin reversal that we just did on our sister channel, the Crypto Sniper. Pop over there. Don't forget to hit the bell as you subscribe to say notify me always. We're calling the Bitcoin reassert bull, having visited the 25k and technically just dipped below it. So what actually is happening is you're seeing the pound and you're seeing the euro actually be firmer against the dollar. So having been the lead steer on tightening, it's very sensitive to expectations. If the Fed is indicating that they're not likely to add rates again and other nations may still hike again, what that tends to do is it sees again a new pivot of expectation. The market is a discounting mechanism for future expectations of return. So it looks 6 months into the forward. If it thinks America's done the bulk of its hiking while others might do one or two more, then it might start pricing that in. So we're getting weakness in the dollar. This has led to the euro getting a bit up, as you can see. If we have a little look on the currency that we are talking about, the euro JPY, this is seeing an absolute surge. And we have upside HVFs, and it's just smashed on, that's the daily. Let's take you into the 4-hourly and show you the structure. What a beautiful, single-minded, beautiful trade with a hunt volatility funnel upside right there, smashing it up. Boom, bosh, done. Target made. So be careful now. The euro JPY right now wouldn't be a chase in, because we'd expect a little bit of a blow off, a little bit of a pullback, a little bit of a pause for a while. That's a bit disorderly for a devaluation in a currency. And this is exactly what happens as the interest rate differentials increase between what you get paid on European debt. It's better to sell your Japanese bonds, give it to the Bank of Japan, sell it back to them at full price, getting very high valuation, even though there's an absolute proliferation of them, knocking on the door, 280 going 300%, and go and invest in another debt instrument if that's where you are as a bond portfolio manager, for example, which is paying you a higher yield where the currency is appreciating, and thereby get more growth and do not get the devaluation that debt generally is facing across the board. So when we look at this Euro JPY, this is the trade that nobody is talking about apart from us, and we've been talking about it, wait for it, for the better part of a year and a half in our community, and a lot of the things are starting to drop right now. So if you think that's an interesting setup, wait till we take you through to the bigger time frames. So I've now shot onto the monthly time frame. You guessed it, we see ourselves in the Euro JPY on macro upsides of a macro nature for the Euro. Now that is going to sound really weird, because since when did we become so pro the goddamn Euro? Well, we aren't. It's a relative assessment valuation, and each currency sometimes takes a turn in being super ugly. The Euro is well set against the yen, and not only is it well set, we've said that it will run from this 134 level to the 234 level. That's right, you just heard me say that. And right now, good people, it's already at the 148 from the 134. That's right, the 148 level. In short, we see surprising performance from the Euro. Now, why might that be? Because everybody knows about the problems of the Euro. And here's a possible theory for you. In this period of de-dollarization, where America has been perceived as the military aggressor and the place that was behind the swift seizure of the Russian funds, a more benign nation or economic zone is the European Union. That's not to say they haven't caused a whole bunch of mischief, sent arms to Ukraine, got hustled along and shimmied along by the Americans, Russia bad, all of those narratives. But there's a bit more division in that. You'll find the Greeks not very supportive of that. You'll find a lot of the Italians not very supportive of that. Britain will be a bit divided, etc., across France and many other places, as opposed to the rather more unified bloc of America. And de-dollarization, as yet, people are not going to, in a currency sense. Remember, a big leakage is going into gold, potentially crypto and Bitcoin. These are not the discussions of the day. We are talking currencies right here, right now. The yuan does not have the liquidity. The ruble does not have the liquidity. Certainly the rand and the rupee doesn't. And as a result, you will find yourself, and Brazil too, in terms of the capital markets, the overall liquidity. So what becomes the alternative in a de-dollarization period as America loses its head, has the belligerent weirdo with his mental issues that is currently in charge? Well, people de-dollarize, they get out of America, and I've regularly described the euro and the dollar relationship as a seesaw for the West, but it's also to a degree that for the world. Now I'm going to point out other currencies that I'm going to drop, and I'm going to highlight the supreme overperformance of the Mexican peso and the Brazilian real as part of commodity nations, agri and mining in terms of Mexico, silver specifically, as well as some gold, that has seen friendshoring, particularly in the case of Mexico, be very, very positive. So we'll take a drive past the Mexican peso and the Brazilian real in our global macro painting of the entire financial system of winners and losers. And here's where Japan is the real problem, because Japan is a nation that is surrounded by potential BRIC nations, India, China, Russia. yet is aligned and de facto defense contract post the World War II by America that is losing ground and facing de-dollarization. Yet Japan does not have the global world currency benefit that the dollar has, albeit in decline, and is on the wrong side of the planet with an aging population. So again, weakly positioned, weakly aligned in terms of trend for the future, and on the other side of the Pacific, which is, in terms of geopolitical events, a problem. And as a result, this is where we find ourselves. So you've got certain emerging currencies that are actually doing exceedingly well, that are plays on the friendshoring, that are plays on agriculture and silver mining, and that is the Mexican peso. In fact, we even called the South African rand as a turn after making its target on the USD ZAR, and it's since strengthened considerably against the dollar, in spite of having 12 hours a day in certain instances of non-provision of power, which is absolutely devastating for heavy industry. So let's go have a look at some of these, but let's just not, having said all of these things, let's just remember that the Eurozone is in between America and the Middle East, which is also an important conurbation and capital formation zone, as well as Singapore. And these areas actually make the euro seem relatively benign compared to the dollar in this de-dollarization. And in the absence, yes, we're going to see increase of trade in ruble, in yuan, and in other currencies apart from the dollar, but the euro will benefit from this too. In short, the 233 yen euro call, another major balls out there, if you'll excuse the phrase, macro call that we're only giving you today, whilst you're at 148, is vast, and there will be many smaller time frame setups for you to chase into potentially. However, it's just made a target, which we've been covering inside our community, and it has been a break since the 134 mark. That's right. You're talking about, must be knocking on the door of 75% for appreciation in the euro. And that is not on account of euro quality. It is on account of yen disparity in interest rates and utter destitution and wrong misalignment. This is going to make the Nikkei export majors super effective. This is the trade nobody has been talking about. For the first time yesterday, I saw Peter Brunt on a tweet saying the Nikkei will run the new highs. This is the trade that not Druckenmiller, not everybody I've listened to on YouTube could discuss. Here is how your Nikkei is performing, by the way, just taking you back into that. And not only is it going to a new high, in terms of what Peter thinks, it's going to go, in our opinion, well through the 57. And with it, a major tailwind. You are going to get quality manufacturers whose main markets are export markets that are absolutely going to be yen hedges, yet valued in the depreciating currency that we've just called to a weak and highly flawed euro for 233. This is your macro case. Hear me now. This is the global macro trade nobody is talking about, yet should be. The collapse of the yen and the subsequent quality exporters moves, and also going largely fairly unreported is the progress of the currencies in certain select emerging markets such as Brazil and Mexico. So let's go through this. The Nikkei. That's our target, 57. That's a log scale, guys. That's a log scale. Let's just right size that for you so you can see it. I'm even going to take this up to 2 months. That's a bit of a compressed chart. This was the huge indebtedness parabola that we've now delogged. And this is the progress. 38.9. You didn't trade 39,000. We have called 57. I've heard nobody say 57,000 for the Nikkei. The first person today say, hey, we might make a new high eventually, and it's trading already at 33, where the high was 38. Oh, that's not a big call. That's lacking the cojones to make a really big call. This is an inverted head and shoulder. And let me tell you, the bigger the pattern, the bigger the target, the bigger the call. This is an inverted head and shoulder starting in 92, 8 years before millennium. Add another 23 years, you are talking about a 31-year period that since this pattern started. It triggered quietly back in 17, only to be dragged back on the events of March 2020 on a wick, and thereafter, March 2020. So 92 to 2020. Think about that. 28 years of inverted head and shoulder with false dawns, my friend. The bigger the pattern, the bigger the structure, the larger the geometric move. It's going to get disorderly on a weak yen. You can trade this. And you can look on the smaller time frames for entries, chasing up a very big pole that has gone running for a long time is bad for risk management. You need to drop the risk times. Oh, hold on a minute. You guys just missed a upside HVF. Where was it? It was based at the 30,000 level. That was your triggering event. Yes, you ran it twice. Yes, you couldn't hold that level. Not there, not there, and not there. And by the time you broke, it is a runner, it's a thriller, it's absolutely ripping. It's ripping on a combination of things. Quality, global manufacturers, in a country that is a major debasing currency, that is not just at the beginning of that stage, that it's only in the first innings of a period of complete currency debasement. And it's going to have problems talking up the yen as long as it seeks to keep a floor under its debt markets. And if you think interest rates are going to turn around and go back to those low twos and noughts and ones and NERP and ZERP, I'm here to tell you that resizing the farming community for a much smaller population does not point to lower inflation. I'm here to tell you that bifurcating the supply chain with pushing Russia and everybody else to the other side does not make for cheaper prices. I'm here to tell you a lot of things that the events of March 2020 and the proliferation that went with it does not make for strong currencies and low inflation. Proliferation is inflation. Inflation is a central banker's policy. It's how he steals from you. It is an additional tax that is a thermostat that they can always push up at key moments to skim the extra cream off your labor. So this was a highly significant break, and you're going to take a rest probably only after the 34,600 mark, and thereafter you should look for fractals and structures on smaller time frames to break you into a seminal trade of net long that will probably even embarrass whatever happens on the AI front back in the US of A. So we're sitting with a soft dollar, we're sitting with a very weak yen, and actually the euro is getting benefit from that. The USD versus the Korean won, that's an absolute spiller, by the way. It is long-term a trade that will eventually come to us, but there's macro essence to this. And you can see this current spell of weakness in the dollar is very much prevalent. The dollar is in trouble. Even on the hedge, on the front of the Hong Kong dollar, we could put in a much lower point down. This was our seminal low. This could be your big first impulse. We can have a 2, who knows how low, and still be in a macro upside HVF. You could still do something like that before you break on that hedge break. So you could be due to go down. Now that's not a massive move in truth because of the controls. It's in percentage. It looks massive because this chart doesn't move much, but it could push back. This degree of weakness in the dollar is going to push back the potential for the Hong Kong failure, currency failure, without a doubt. And it doesn't matter who you look at. With the dollar generally being weak and the yen being weaker still. So what if we compare the two weak boys in all of this? By the way, Polish zloty. Let's just show you something on what is an emerging currency. Look at that. Since the blow-off 2, well through 5, you are trading low 4s and you're looking likely to break below the 4s. That's substantial on what's considered an emerging market after that upside moves. So there's a lot to be said. Let's go to the USD JPY. Who is the weakest of them all, you ask? Who is the ugliest at the ball, you ask? Well, I'm here to tell you that it is, in fact, the yen. Again, forgive me while I locate my yen. USD JPY, we've called for late 40s, round about the 148 level. See if I can just find my chart that I've drawn so many times. There it is, tucked in over there. This is gaining ground quite preemptively. Yes, another inverted head and shoulder break, friends. So you're sitting here watching a currency that is in meltdown, that is being licked by the Mexican peso, the Brazilian real. I mean, one day the Japanese yen could be weakening for longer than the Turkish lira if it continues like this. This is not a very good performance at all against a weak dollar that we've already shown you rolling over against the euro and across many others. This is your left shoulder, this is your W head, that's your right shoulder. We called that break. This was a beautiful wind up. You had opportunities, but these are the trades you're not taking, and that is the 148.5 that we see is the next resting point, and it's only at 141. It's literally just got into the 140s after sitting on the key level of 139.3, a legacy previous target that we had in there. After breaking its 137.50. If you had held the yen, even against the dollar, the underperformer of the majors apart from the yen, you would have run from 137.5 well through 141, knocking on the doors of 142, looking for 148 as a trade. The currency trades that have been dropped here on this channel that you've not taken, you've not heard, you've not listened, are hammering their way home. This is disorderly for the yen, and eventually something will stop, and I think it only gets properly out of hand when it's well up here, because there's very little that they can do. Too much debt, got to keep it up, too many retirees, all on an inverted pyramid of demographics, relying on that for their pension. You can't pay them that amount of interest, you don't have it, you devalue the currency, and as a result, the further devaluation of currency is going to put input costs and costs of all imported foods, imported foods, very high on the Japanese till. The Japanese yen is in fatal disarray, my friends. And this is how they are going to allow that faucet to unwind the excessiveness of their debt. So let's have a look at one or two of those other emerging currencies. So let's just show you what's been going on. Shock and awe USD Mexican peso. Let's just take you through the peso quickly and show you that fine fella. There we go. We're starting to find some of our charts again. This guy has been an absolute beast. Go to Mexico, my friends, Mexico. You would have had a much better March 2020 through to 23, I can tell you that. You wouldn't have been masked up and muzzled. This is a spiller, an absolute thriller. We've drawn the head and shoulder on this some time ago. That was the blow-off that coincided with the events of 2020. Of course, the supreme, everybody dashed to the dollar. Squeezy, that little tequila bottle. Get every drop out. Boom, boom, bosh, major spiker-mentals, broadening structure, only taught by us how you trade it. This was continuation to the downside. Multiple grind lines that would have shown you. You could have had a positive carry trade. Long the Mexican peso, short dollar. Long the peso, short dollar. Think about that now against the yen. If you can't put the peso directly against the yen, you could have gone long peso against the dollar, long dollar against the yen, same amount of money, hedged out your dollar exposure, long peso, short yen. Wow, what an absolute trade. And who would have guessed it? And had positive carry on a controlled interest rate environment where you borrow yen for tuppence and you get paid real interest on your peso. Yep, the emerging yielding economies that are of real scale are actually doing quite well, especially if they're in a position to friend-shore, especially if they're in a position to provide agriculture on grand scale, etc., etc. So here is the Mexican peso. Let's talk about the Brazilian real, let's say it properly, USDBRL. And what a beauty he's been to in terms of performance. Let's have a look, see if we can find him. Here he goes. So this is in big time frame. Let's just take you into this fella. It was, just so that people have any doubts about policy, the real has always been a nightmare. It's been the second coming of the Argentine peso until recently. In short, it lost value to the dollar until recently. Squeezy, up, and up, all the way up, rolling over out of this. This little structure, my friends, gave us a target that took us to there. I have it drawn on one of my other Brazilian real, and you would have got out up top there. And since then, it's been nothing, and it's rolling over and puking to the downside, showing that the dollar is no longer getting it all its own way. It's no longer being seen necessarily as the easiest, hardest currency out of all of them across the world, as it is selling off. This is overperformance from the real, with more of it to come. Yes, indeed. So that's a couple of examples. By the way, the top call on the rand, let's just show you that fine fella as well. So cleaning this chart away, you will see that we've been in a macro upside against the ZAR. Why here? You want to know why that funnel's drawn there? Click the first link in the description below, book a call, find out why HVF method works. Where's the target? And I am telling you, my good friends, I literally purchased motorcycles to go on rides at that point. I literally did it. Not one, but two. That's right. One for the absolute hard dirt, one for the adventure side of things. And a community member is going, and I was advising him on getting it paid. Not only the bills for the bikes, the bill for the project, the whole holiday, and all the accommodation, all paid. Why? Because delaying was going to cost me in dollar revenue going down. The dollar is going down, friends. The dollar is going down. You will see this also squeezed a little bit higher. Squeezy, like that. You don't get that level of accuracy. It's actually too good. It literally turned and died at that point, and you are facing a pullback. And I remember saying, this looks like one where you would get another positive currency against the dollar. And this is an absolute bun fight of a nation right now. A bun fight of a nation right now. I can tell you, more little squeezes all the way for you to have jumped into the long side. More little squeezes all the way for you to have jumped in on the long side, but you never saw them. You never saw them because being a community member, well, that costs some money. You'd rather hodl on doing what you've always done, getting the same outcomes you've always got, because you don't really want to grow. You're not ready for the next level. You're not ready for the responsibility of managing much larger money. If you are, you've hit that link first in the description below and you book that call. That is an absolute violent rotation to the downside. And this is dollar weakness, not rand strength. This is dollar weakness, my friends. If you try the euros are, you will see it doesn't look quite so dandy for the rand. At the moment, our biggest bun fight currency is the USD Tri, but the Tri has stopped losing value against the dollar. They're implementing a little bit of capping in around the 23. They don't want it to run the 25, but if you have a look at the Euro Tri, it keeps bleeding to the upside. That's your difference between the euro and the dollar right now, friends, and that is Turkey. So Turkey still winning the award of the weakest currency. Have a look at the Turkish lira against the yen, and I'm afraid you're still winning the award, Turkey, even against our friends in Japan. The Turkish lira buys less and less yen. But of the majors, that can be traded easily, the Japanese yen is by far the weakest currency. Look at the Norwegian krona against yen. I mean, you can do this any way you like. We've got impulses and setups. You get the idea from us, go and try to do what you can for yourself. Once you realized you could have made more by doing the one that's better, that we broke down for you, that's in our community, you'll say, hey, time to join. Look at that, amazing run. And that's not even again on a strong oil market, on a strong krona market. We are sitting here. The Swiss franc, friends. Oh my goodness, the Swiss franc. Another setup. I've drawn it on a different chart. This yen is in massive trouble. If I weren't clear on this single point, please hear me now. The yen is the release valve for this Ponzi scheme. The yen is absolutely the release valve for this Ponzi scheme. I want to find the one where I've done my draws. You can see you've just missed another major upside setup on the Japanese yen versus, there you go. So here's a 4-hour absolute blast away, triggering event of great gumption. You've missed this fella. Ripper. 157. Now trading 158. Chronic overperformance against one of the strongest currencies. Again, for us, if you have to choose an FX currency, Swiss franc for now is probably it. On all technical levels. It beats the euro, but we have a structure and a target against the euro. The franc can be weak for spells against the euro. It isn't always only one way. But just look at this. Just look at this chart, friends, on the weekly, on your monthly time frame. Look at these structures. This beautiful rounded bottoming that came here. This building momentum. Wow. Yes, you can have a short spell. That was, of course, it was not so short, it was 3 months, during the pullback where yen got some bid support when the dollar rested on its strength. Now you have dollar weak, yen pathetic. Think about how this is going to ignite your Nikkei. If you can't trade short yen and you can't trade long currencies, go and choose the Nikkei for the target that we provided you. This is wealth building for you right here for free. You could have got it earlier. You could get a little bit more support on that. You could see the break-in points on lower time frames. That's what we do in our community. This is a huge gift for you. This is the trade of the next 4-5 years. Yen weakness. Until reset and debt collapse and the whole world changes, yen weakness is your friend. Can you hear me? Nikkei long on the export majors particularly. You can do selective shares that are high valued companies with export markets. They in yen terms can be traded to the long side with exceptional gain. And we do the HVFs on the individual stocks. You want to see more of that? You can pop on to the link below, book a call and join us at the Sniper Circle, specializing in bringing you reset wealth as the market structure perversions all unwind. Real opportunities are presenting themselves. Are you going to be left on the sidelines and inflated away in a currency that is being devalued? Are you going to be slowly impoverished, or are you going to take action against the psychopaths that have put the shenanigans game together and macro trade your way to multi-generational potential wealth? If you are, we could be the ones to help you. It doesn't happen overnight, but you get decades when nothing happens, and then you get weeks where decades happening. And we are in that era right now. And I am showing you one of the things that just needs to be set and forget for a long-term view. Okay, until next time, hit the like if you enjoyed the update. We are talking squeezy, Japanese, yen, all the way down. There's lots of other targets, lots of other things to show you. We'll see you on the other side. Thanks for watching.